GKFX Prime presents the Market Analysis Webinar.
Hello traders, welcome back. Welcome to another weekly analysis video. Today for the week of beginning 30th of May. My name is Dima. I've been a trader for about 5 years now. So I am going to help you look over this week's charts and the opportunities that could be setting up for possible trade ideas for this week. So this is going to be a continuation of last week, actually, because a lot of the scenarios that played out last week are actually viable for this week as well. So let's have a look at what we've got. And again, we've got a mix of Forex and indices and a couple of others as well. So let's start with the majors. And this time I am going to look at pound dollar. Right, what did we see last week? Well, we had this retracement. The week closed bullish. So we had these two down candles, two up candles, and we can see that this is part of the bigger retracement of this very big move. And now we are retracing back up after having 4 weeks of downwards movement. Now, if I draw a fib from the last significant high to the low, I can see that we've just reached the 50 level, and in order to continue the selling on this pair, we'd have to reach a bit higher to the 61.8 or above. That's where the market tends to waver and then tends to make a turnaround. So we haven't reached that point yet, and we are still bearish on the dollar, because the dollar is still showing signs of weakness. So in line with that, merging that with the pound dollar, which will do the opposite. So we're looking for a buy into this week. Now I'm going to go down a time frame into the 4 hour, and I can see that we've got this level right here that we've just about trading at the moment. And we've also got a level up here that I was looking at as a possible place for the market to reach to. Now, if this week we get a push down, the nice cheap price to get in on would be about here. Let me just mark out this zone for you right here. So if the market drops down at the beginning of the week, and I'll be looking to buy it around this zone right here. And if the market moves straight up, then I'll look for a retracement to then continue on its way up into this area right here, because that's where stops and liquidity will be lying for in the market, because many traders will have been looking at that from way back here. There'll be stop losses up here. So this major swing will be a target, will serve as a probable target. So at the moment we have this little consolidation, a bit of hesitancy in the price action, as you can see. So what I'd really want to see is a nice push higher to confirm that buy, because at the moment we've only had one candle close above this level and then it went right back down. So a bit of uncertainty. We're going to see how the market plays out and then take the higher probability setup that would develop. I'll have to see what the market gives in this case. So those are the two scenarios that I see as being probable or high probability to trade. Of course, this would be the better one because we're getting a nice cheap price and a nice risk reward, almost about 200 pips from here into that target area. So that's the pound dollar. Okay, I'm going to go into the dollar CAD now, the next major. So I don't know if you remember last week, if you were with me, but we did have a look at this level. So the market poking above and then closing down below. And we've now had, similar to pound dollar really, those two candles, bullish candles and then two bearish candles. So we've got this swing on the weekly time frame, and now I'm looking for that continuation down. Now, from last week, if I look at the markets that I had here, I did intend on the dollar CAD coming down, which is what happened. It kind of ranged for a bit, so there's a lot of uncertainty, a lot of question marks of what it was doing, messy price action here. So You may have taken that, or you may have not. However, I'm still looking at this being a continuation of bearish price action. And the reason for that, again, got this fib here. We've gone beyond the 50% retracement and looking to come down into this level right here where I've drawn this line. And that will be about the 61.8, and possibly even lower down into this zone where we've got the big gap in price, where price hasn't traded back into as a possible lower target. So I'm going to put a line there. Let me just remove that. So I would look to have would be great to have a better price. So a possible retracement before continuation down. That would be a nice higher probability possibility. And on a lower time frame, you can see that there's a gap in price right here. So I might see that retracement into there. If not, same thing as GU, maybe a push down a bit lower, and then a retracement on the smaller time frame, and then a continuation. So that would be a little bit of a higher probability scenario for me. So we just have to see how the price action develops, and it will be good to break this significant low right here. Then that will add further confirmation. At the moment, it's a bit, you could say, oversold. If I look at the 1 hour, we've been trading down very heavily, so a pullback would be favorable and would be a better price to sell from in terms of probabilities. So that's the dollar CAD. So again, bearish on the dollar, which lines up with this dollar CAD, and bullish on the pound dollar, which lines up with the weak dollar. We also have, if you remember from last week, spoke about oil, and oil is tied to the CAD. And since oil is bullish at the moment and the price of oil is increasing, as I'll go into the chart in a minute, you'll see that also ties into the probability of this chart, because a weak dollar paired up with a strong CAD would be a sell-off in the dollar CAD. So as one goes up, the other does the opposite, comes down. So that is why I've chosen dollar CAD in this occasion. Right, now I'm going to go to the cross pairs, the minors. Let's look at the pound Aussie now. I think I spoke about this last week. A pound Aussie, I was still looking for it to break this very obvious, very clear trend line that is just touched many times. And what happened last week? Well, we had yet another touch on it with no meaningful breakthrough. And I'm looking for that breakthrough now, because there will be stops above here, and the market likes to hunt the stops and break through them. So now the question is where to enter and where will be a high probability entry setup, and also the target. So target will be just as last week, this level right here, which is a gap in the price, and we've kind of bounced around here. We still have this very clear, obvious range. Now, what I'd like to see in order to get here is first a better price. So if we look at last week where we ended up here, sorry, no, that's not there, it's here. So this was the beginning of the previous week, and I was looking to break. It didn't break, it continued to range. So the nice price would be down here, a break below this level before a break of the trend line and a higher move up. That would be the preferred scenario, again, because of the lower price, because of the increased risk reward. Really prefer this price down here. Really looks like a nice level to trade off. And if I draw a fib here from the major high to the major swing low, then you can see it's below the 50% mark, the halfway mark, and into the 61.8 will be great to look at. Much better probability from there. And yeah, the target would be a break of this trend line and this point right here. If you can see this high that's poking here. Okay, that's pound Aussie. let's move on to the Aussie CAD. Now, if you bear in mind for a second, we've paired up a few charts here. So a bullish pound Aussie would be bullishness in the pound, which would also match the pound dollar here, and bearishness in the Aussie. So Aussie CAD, here I've chosen it as a bearish scenario because, again, we've got the CAD, which matches with the bullishness in oil, and the Aussie, which matches with the weakness that we are looking at, the same weakness as pound Aussie. So what do we have here? We looked at last week. What did we have? I think we looked at a possible sell scenario after heading into this level. The market has just ranged, it hasn't reached that level, and looks like we're still creating these higher highs and higher lows. So we're pushing further up, as you can see. Now the question is, what are we seeing happen here? Well, my eyes are looking at this range, and this is the accumulation in the market before a big move happens. Usually the longer the accumulation is, the bigger the move. So I've had a whole week of accumulation here, ranging market. So now my eyes are attracted to this level right here, which is poking out just before the gap in the price, which is this whole area right here. So I'm looking for the market to go up into, first port of call will be this swing right here before any downside. Now it may or may not happen. So I see two probable scenarios here. Let me just delete all of this just to tidy the chart up. I see two scenarios, either the market retracing and then heading into this zone right here. That's a possible buy opportunity into this gap right here down below. If I zoom in, you can see this gap in price and the market hasn't retraced into. I can also draw a fib from high to low. And again, we haven't even reached the 50% level. So we may yet do that before actually heading up there. So that is the possibility here. And failing that, if the market heads straight up like so and never gives us that retracement, let me just delete this. Okay, then I'll be looking for that reversal back down to the weekly level, which is down here. And you can see that here. I think we talked about this last week, that the market has made its move down, but it hasn't reached this level right here, which indicates that there might be further downside potential for the Aussie CAD. So that's where it is right now. And if I do get that, then obviously it'll be interesting to see what actually happens in this area. And we need a lot of good confirmation to make it a higher probability setup. So that is Aussie CAD. Now I'm going to move on from Forex. Let's have a look at gold. So let's keep in mind that for the moment, we're still bearish on the dollar, and that means in correlation terms, some strength on gold, because gold is priced in dollars. So if I look down at time frames, you can see last week again was accumulating here. The whole week was ranging, very tricky to trade that. I was looking at a buy scenario, which I identified right here, mark this out. So it was still buying just about, and it went into a range, broke through this level, and then broke through this level right here. So if I delete these from last week, if I delete all of that and this line right here, and I go to the higher time frame, we may see some more bullishness and continuation of the bullishness into this green zone right here. Now, since the market didn't drop from that green zone, we may come back to retest it. So let's look at the lower time frame. And again, all this accumulation, you see here, we may get a sharp move a bit higher, and then we'll see what happens at this zone. So if I look down, the time frames, we have an area that the market has traded into right here, which if you draw it out is a kind of support resistance zone. So we may get that bounce into this area right here. This is a bit tricky to trade, and bear in mind that we have retracement here. This whole move right here is a retracement of this move down, and we do see some bearishness over the last few weeks. So buying gold right here in its accumulation phase, nearing the end of what could be a possible retracement, it's a bit risky. It's a bit it's a lower probability, let's say. So not my favorite setup for the week, I'm gonna tell you up front, but let's see how it plays out. I'd like to see some very obvious price action. It'd be nice if gold went even further down into this area. Possibility that will create an even better price and then jump back up here. But we'll see what happens. Again, you want to combine price action, manage your risk, and really look at what price is doing at that point. The candles will tell you the story. So that's gold. Now let's look at oil. So I did mention oil. And as of last week, if I have a look on the 4-hour chart, here was the beginning of last week. I was looking for the market to come down and before heading higher. It didn't actually do that, but the direction was correct. We got the bullishness there. So let me delete that. We've then reached the first level, and now I'm looking for the market to head into that second level right here before heading even higher. So I'm going to delete this line. Now we've surpassed that. You can see we've had bullishness last week, bullishness before, and now just looking at the continuation. So I'll delete this, so that's now gone. And I will look for the price to continue, first of all to this level. If I go down a time frame into 4-hour, what am I going to see? Well, I do, again, just the same as before, like a better price. Where do I see a better price? Well, we've had this move up here, so I would like this zone right here, which hasn't been retested yet, and is a kind of support resistance zone. If I zoom in a bit, you can see that here as a possibility from the last swing to the current high. You can see that the 50% and below is right here. 61.8 would be much more preferable, and oil is quite volatile, so I wouldn't be surprised if it does that, if it retraces deep into here, which will match with this support resistance zone before heading higher. Right. Now, let's have a think about the alternative scenario. If it doesn't do that, where would I be looking to? Well, I'd be looking at a move higher, a daily close higher, and then a retracement lower before, once again, continuation. So similar to the other scenarios that we just looked at, the other setups, and we're going to see what happens. So once again, at the moment it's uncertain. We closed the week pretty much at its high point, at its extreme, so I don't want to be buying at this extreme straight away on beginning of the week on a Monday, because, well, it's a high price. I always want to get a better lower price. That's what I prefer. So I personally, I don't chase and let the market come to me, and it's really much easier, much more relaxing that way. So that's oil, which matches up. As you can see, this bullishness in oil will be bullishness in CAD, and conversely, with correlation, any pair that is matched to the CAD will probably be a higher probability in a reaction. We'll see a reaction because of the strength in the CAD and strength in oil. Okay, I'm going to move to indices now. Let's look at the S&P. Look at the weekly chart. So what I pointed out last week was that what we were looking at was a retracement back up into the levels that we see here, the marked out, and indeed it did that. I am also bearing in mind that we are in an overall downtrend. You see these lows being broken, which are marked out with these lines. And this retracement did indeed happen. If I look on the 4-hour, I marked out this zone right here and market trade into it and bounced right off and then just rallied, completely rallied. That is one hell of a bullish move right here. As I can see, that was the markup that I did right there. So let me just delete that now. So we traded into that zone right here that I expected, and I marked out this point as a possible swing high. Let me just delete that, and we've now gone into the 61.8. We've gone into this zone, so we're gonna have to see what happens with price action. We are in a bearish trend. So the question is here, gonna have to trade carefully with this one. Let me delete some of this stuff because we are now at this zone. We're now in this deep retracement area. The market has reached that area. So the question is it going to retrace and go lower, or is it going to reach further up into this gap in price and these highs where liquidity and other people's stop losses may be resting, where the market may reach into? So this is where the uncertainty lies, and we've got several possibilities. What you can see is that the market went a bit lower and really closed right at the high. So it ended up with this very strong bullish candle. But that doesn't necessarily mean that we're going to have a continuation of this bullishness. This may be just a run of stops, stop hunting, and this would have, you can see it closed very, very bullish on Friday last week. And what would that do? That would tempt a lot of people to be buying, to be chasing the market. So not recommending that. Like I said, not something I like to do. So the question is, what's going to happen here now that we've reached this area? I'm going to look into a lower time frame and just identify here some levels. So I've got a level here, and obviously, as I was saying, there's this area right here, which I'll be looking for the market to possibly reach to. But if it does, this will be the first obvious price level. Okay, so how do we approach this? Well, what I'd like to happen is, ideally, in terms of a high probability setup, we want to see the market break really as high as possible, break right into these levels, and then come down somewhere lower back into this zone before placing a buy, that the market thinking or creating a higher probability, a probability scenario for the market to come up into this level. Now, the trick is that sometimes the market likes to accumulate and hesitate around these retracement levels, especially these deep retracements. So we may go into an accumulation phase. It's very more risky, I would say, to trade around this level at the moment. If it does come down lower sharply, it may be a possibility, maybe an opportunity to trade this support resistance zone. We'll get a nice deep retracement to then trade it back up into the area right here and possibly into these highs right here. If that is at the beginning of the week, I don't see the market make that push higher. So I'll be trading very carefully. Want to see what price action does. Want to see a nice retracement, a nice swing. If these higher lows are indeed the real trend, then what I want to see is, I want to see this swing right here hold, create another swing pattern and more bullish momentum to the upside to actually enter a buy. That's if this is a continuation from last week, which we don't know yet. So we'll have to see this one. This is also a tricky one and not my favorite, to be honest, as it stands right now, because we are reaching a point of indecision where the market could range. So similar to the gold trade, actually. So similar scenario, reaching into that zone where we're going to have to wait and see what price action does and how the market reacts off that level, off that zone. All right, so that is the S&P. Finally, Bitcoin. Let's end with this one. And this is an interesting one because Bitcoin is really testing a lot of traders right now. This is we're seeing a lot of interesting price action. When I say interesting, I mean uncertain and a bit funny. Here was the last week, beginning of last week, and what can you see? Well, I was looking for that lower price in order to buy, to create a higher probability buy. That did not happen. The market, what did it do? Just like many of the others, continued to range and just made it more and more difficult for many traders. So let's try and pick this a bit more carefully where we stand right now. I'm still looking for the buy opportunity because I'm still looking for the market to go into the 50 and the 61.8 retracement. So still expecting the market to retrace, fill this gap or even this gap up here. So we've got this big zone to look for. And once again, looking for the same thing since we had not much action in terms of the higher time frame. Still looking for the same thing. And it's interesting here, if you could look a bit more closer, as well as this range, many will have been looking at this as a wedge pattern or a triangle pattern. But what you can see as a hint, just pick some things out here, yeah. So we've got this, I'm going to take this arrow, we've got this one touch here, we've got another one here, got this obvious trend line that's developed. 1, 2, 3, 4, 5. I'm not even sure how many that is. 6. Either way, it's many. What does that hint at? It hints that the market is likely to break this trend line, and it may break it with force, seeing as we have many stop losses and many people will be trying to protect their positions at these swing points. But the market hasn't, if you look at the price action, actually dropped. It hasn't followed that theory of the trend line, which means that the opposite would be true and it's more likely to break it. So we've had these lower lows here and the market keeps enticing people to go lower. So what I see as a more high probability scenario is the same thing as last week. Nice deep drop down, either to this zone right here, which would be a nice deep retracement, or even the creating an equal low, and then a move higher. And the first point for a take profit area would be this swing point here, and then this swing point here, and then the gap. So we've got kind of 3 areas to look out for, and that's what I see as a higher probability scenario. Now, if we have to consider the other option, which is, well, what if it breaks the trend line? Well, if it does that, although I prefer this lower price here, of course, because we want to get a nice cheap price. Cheap is always best. But failing that, if we get a break, like a nice strong break, then a retracement back down into the trend line or this area right here of these swing points, that would be the nicer area to buy. And once again, we're looking to buy and come up into this swing level right here where this arrow is, this price, which is the 32,700, something like that. So that's what I'll be looking for. And let me just place the price as one here. This is the next level. Oops. So that it's more obvious for you. This would be the next level up here. And obviously, much better price would be to sell somewhere down here. So that's the scenario I'm looking at for the for Bitcoin. Now, again, if you bear in mind that Bitcoin is tied to the dollar, priced in dollars, Once again, weakness, let me just point it out. Weakness in the dollar, which is what we're looking at the moment. Let me just play this out, draw it out for you. Weakness in Bitcoin, sorry, weakness in the dollar would mean the opposite for Bitcoin. So for currencies and for Bitcoin, it means that we're looking for strength in Bitcoin. So this is the correlation aspect of the market, and the market doesn't always do that, but more often than not, it follows these patterns of correlation. Right then, so that's the outlook for this week. Once again, we've got these 8 charts to look at. Make sure you manage your risk if you pick pairs that are correlated together. For example, pairs with the pound, both of these are pound pairs and both of these are CAD pairs. Manage your risk. Do not place all your risk on both. Make sure you spread it out if you're trading both, or pick one, the higher probability scenario with the more cleanest price action. So I usually go for the one that looks clearest and focus on that. And once again, the same with the other scenarios, these other setups. Okay, so that's that for this week, and good luck in your trading. Manage your risk, and yeah, hope this has been helpful for you. If you learned something, see you on the next week's video, and best of luck for this week. Thank you. Chat soon.